I have published earlier today, June 12th, 2025, a new post discussing some stock treasury bill purchases at auction and a few corporate bond purchases over the past few days. Corporate bond and treasury bill purchases totaled 30,000 in principal amount. Stock buys and sells are in a trickle mode since I am hesitant now to buy anything based on valuations and my concerns about the U.S. economy going forward over the next year or two. And I'm reluctant to sell stocks given my already low stock allocation. I'm continuing to reduce my positions in Canadian Reset Equity Preferred stocks, which I trade on the Toronto Stock Exchange using my CADs that are owned in my Interactive Brokers account. I've now got an extreme surplus of CADs sitting in that account, which IB does pay a dividend on. IB charges a $1 commission to trade a 100 share lot, and that is the lowest commission for that kind of trade that I have in any of my brokerage accounts for trades on the Toronto Exchange. I discussed in today's blog post eliminating my position in a Trans-Alta equity preferred stock, symbol TAPRH, that trades on the Toronto Exchange by selling 100 shares at $24.58, recognizing a Canadian dollar profit of $803. Par value is at $25. That one reset in September 2022 at a 3.65% spread to the then existing 5-year Canadian bond yield, which resulted in a coupon of 6.894% paid on the $25 par value. The next 5-year reset will be in September 2027, which may result in a lower coupon for the next 5-year period. If that appears likely as we move closer to that reset time, then the preferred stock will probably drift down in price. I have a YouTube video discussing Canadian Reset Equity Preferred stocks, which I will link in the More section below. I have eliminated the ones that reset every 3 months at spreads to the 3-month Canadian Treasury bill, given the lower reset coupons. This has been a profitable niche trade for me. One of the niche trades where I have never actually realized yet a loss on a trade, and I started trading those securities in 2016. I will generally own 200 to 250 common stocks and stock funds, with an overall allocation of 6 to 8% of my total assets held in brokerage accounts. Those positions are now giving me as much excitement as I can take at my age. Even with that low allocation, I perform several risk mitigation trading strategies, which can be gleaned from my blog post. It include buying the dips and selling the rips, selling my highest cost lots profitably using specific identification, high cost or FIFO tax cost accounting, taking profits when I am satisfied with the total return, and keeping an extreme level of diversification. The focus is on dividend-paying stocks, and most new purchases can be characterized as consistent with a value contrarian style, with the objective, being a realized total return coming mostly from the dividends, with some from the realized gain on the share price. So I'm primarily a total return contrarian value investor. I did not own a bond prior to 2007. My first bond purchases were in 2007, and those were purchased as I became more concerned about the stock market, and I started to buy high quality corporate bonds rated A or better in my Fidelity account, and I mentioned that strategy early in my blog post, which started back in 2008. I do believe that the government is headed toward a fiscal train wreck that appears unavoidable to me, since nothing is being done to avoid that result, but only to move that event forward in time. Republicans and Democrats each have their own way of contributing to that result, which may occur within my lifetime. I assigned 10 to 20 years as the most likely time period when that will occur. For the current fiscal year ending in September, the interest on the national debt is projected to be $1.2 trillion. And that is far more, that's over $200 billion more than the entire U.S. debt in 1981. The government paid $92 billion in interest just in May. The budget deficit in May was $318 billion. For some reason that is impossible for me to understand, Republicans believe that cutting tens of thousands of federal jobs, defunding PBS and NPR, which they're trying to do now, and eliminating the U.S. Foreign Aid Program, USAID. That is the way the U.S. has exercised soft power in foreign countries for the past 50 or 60 years or so, will actually do something meaningful when all of those cuts do not amount to a hill of beans in the scheme of things. The CBO projects that the House budget plan would add $2.4 trillion to the debt over the next 10 years through their tax cuts. I believe that the number will be far in excess of that number because the debt financing cost on the huge debt, which will be expanding at about $1 trillion per year, will be more than the CBO is projecting. More debt created to finance budget deficits that will likely top $1 trillion per year that it would be annually will cost far more in forever interest payments to service that debt than the politically inspired spending cuts and some relatively minor government programs that the Republicans do not like.